Hello, investors. Welcome to the channel where we look for possible swing trades using tactical analysis. Before we begin, all I ask is you hit the like button and subscribe to really help the channel out. With that, today we're taking a look at Target Hospitality Corporation, ticker symbol TH. This falls under hotels, restaurant, and leisure industry, but the company, based on their description, seems to cater only to government agencies and large businesses. If you go to their investor website, it says that they focus on setting things up for the US government and Fortune 500 companies. And apparently they set up various locations around the country for large contracts to be carried out, or they feed workers with their food services, and they also provide housekeeping, groundskeeping, security, recreational things, a whole host of activities that you might find in a hotel, but they specifically cater these needs to large corporations and government agencies. And here we are on Target Hospitality's annual chart, and you'll see they had quite a volatile last week when they reported earnings. It looks like it was an earnings miss, but then they maintained their forward guidance. So the share price went up and then down, and at the moment it is well below all the major moving averages, and you'll see it's right at the 52-week low. All the moving averages, as I will see here, also are in a fairly tight cluster, meaning there should be quite a bit of pull for the share price to return to that level. So that is between $14, $15 a share from where it is now, where it previously closed at $11.44 a share. And if we look down here at the RSI, you'll see it is falling. It is not quite in the oversold zone as of yet, but it does look like it's going that way. And both the stochastics are right around oversold. It's a little difficult. They seem to be actually going in opposite directions. And the volume chart shows a giant spike in mostly selling pressure, although this largest bar here is green. All the others around it are red for 8 days in a row. So that kind of variability does seem a little odd. However, if we look at the totality here, it does show that there's far more selling pressure than buying pressure, and that the volume is beginning to come down. And the MACD does look like it is falling. And again, you can see it's choppy here. It did certainly get wonky over the last week, and it is probably still heading lower, although don't have a crystal ball. I wish I knew for sure, but it does seem that way based on these technicals. And then if we take a look at the fundamentals here briefly, we have very high institutional ownership at 96%. And then we also have high short interest at 18.62%. And this setup, as you may know, makes it ripe for a short squeeze. So if the share price continues to fall, then institutions will need to cover the shorts. Now, of course, they will need to buy a lot to cover the shorts, and that will force the price up rapidly, as we've seen several times over the last few years. Then we move on here. We look at the debt to equity ratio, and there is not a lot of debt here. It says less debt than 74% of other companies in the industry, which is a great sign. And usually they have a lot of debt because a hotel is an expensive facility, as you can imagine. So the fact that this has far less debt than others in the industry is a great sign. PE ratio is extremely low here, 8.54, and that is lower than 87% of other companies in that industry. A minor sign of undervaluation. Certainly, I wouldn't hang my hat on that by any stretch, but that is one piece of data to look at. And gross margin is almost 55%, which is excellent overall. However, it is average for the industry, but the operating margin, on the other hand, 41%, is outstanding. And that beats out 91% of others in the industry. That is an impressive operating margin by any stretch. And I'll also point out the net profit margin of over 23% is outstanding as well. Now, the return on equity here is absolutely amazing, almost 68%. And that beats out 99% of others in the industry. A 68% return on equity is, as I said, it is truly amazing. Return on invested capital is over 33%. That is also excellent. Growth rate beats out 95% of others in the industry. And there is no dividend for this company yet, so we cannot compare that metric. But all these metrics are outstanding. It is just overall an excellent quality company based on these metrics. And I'll also point out the analyst here. Analysts project a much higher price for this, over $20 a share. While there are not many analysts analyzing it, they still have a consensus that it will go up significantly, almost 80%. And according to Yahoo Finance, they predict a 40% upside to this company as well. Not as much as those quoted on E-Trade, but still considerably higher than where it is now. So in any case, please let me know what you think of Target Hospitality in the comments below. Is this a good buying opportunity, or is this just one to avoid? And if you enjoy having ideas like this sent directly to you, please hit the bell notification to be alerted when new videos post. Remember, I'm not offering financial advice. I'm not a financial advisor. I make these videos for entertainment, discussion, and education. And please do your own due diligence before purchasing shares in any company. But if you would like me to analyze a specific company using these metrics, just let me know in the comments and I'll get to it as soon as I can. That's all for today. Thanks for watching and good luck with all your investments.